Well, hello everybody. Jamie here. I'm trying to figure out where to put my notes. It is 2022. This is, I think, the first time I've gone live in 2022. Hopefully everything is working. Let me know. Make sure that you can hear me. Say hi if you're here, if you're watching this on replay. Sorry, I'm just going to talk for a few minutes just to wait for people to join who want to be on live. So I'm currently live on my Facebook business page, Jamie Trull, in Financial Literacy for Women Business Owners, my Facebook group. If you are not in it, you need to come join jamietrull.com/group. We are almost 40,000 strong at this point. And I am also live on YouTube. So if you're watching me on YouTube, make sure to like and subscribe. I've been told I'm supposed to say that. So I will say that. Make sure to like and subscribe because it means a lot to me. Okay, everybody. So it's 2022. We're here. I haven't seen you guys since 2021. And so we're going to be talking a little bit today specifically about taxes because we're at that point, right? Where maybe we put it off. We were like, you know what? We're still in 2021. We got time. And now we're sitting in 2022 and we're realizing that some of those deadlines are coming up. And we're going to talk specifically about a couple of deadlines too that are coming up in the month of January that you do not want to miss. Okay. So tell me you're here. I see Danielle. I see Jackie. Hi, guys. Hopefully things are going well for you. We had, so last week we were snowed in. I live in Nashville, Tennessee. So it's kind of interesting when we were snowed in. My kids went to school for one day. They went back to school for one day and then they were out of school the rest of the week. So I'm happy this is my first week of, having the kids in school. Lord knows how long it's going to last. I don't know. So I am going to take advantage when I can. Cheryl with an E is here. Hello, my friend. Christina is here. If you're watching me in the Facebook group, you may, even if you've done it before, I don't know why I broadcast via StreamYard, you may have to go hit the button. It should be above that says to give permission for StreamYard to see your name. Danielle can also drop the link to be able to do that in the chat because otherwise I can't see your smiling faces and I need to be able to see you. I see Dana. Oh, see, I don't have the same, Go Titans. I don't know. Let's see. Oh no, taxes and COVID. Oh, that's not a good combo. I will say that is just not a good combination. At least it's maybe early in the tax season. Okay, so we're going to talk. I'm going to give you guys a couple of quick tips today, some things to remember when it comes to tax season, whether this is your first tax season as a business owner or you've been doing it for a while, especially if you're coming into tax season with that feeling, which I think so many of us do, of like, oh my gosh, I have so much to do. There's so much to catch up on. I haven't kept up with things. I need to get a handle on this as quickly as I can. So first things first, deadlines. Let's remember some important deadlines. Your estimated taxes for the fourth quarter. So these are taxes that you are supposed to be paying in essentially for your business, right? Because now it kind of varies depending on the entity type you are. You may be paying yourself a salary, so you may have some taxes withheld already. But typically, if you're paying yourself draws above and beyond your salary, or maybe if you're a sole proprietor or an LLC that doesn't pay yourself a salary through your business, then the taxes are something that you are responsible for, right? You don't have an employer who's taking those taxes out of your paycheck already in many cases. So you want to make sure that you are doing that. Why do we pay estimated taxes? I will say not everyone does. And maybe early on in your business, it's not that big of a deal, especially when you're not making a ton, especially a ton of profit. Because remember, we pay taxes based on profit, not revenue, which is why we really focus on profit in this group, not revenue, right? That you need revenue to have profit, but it's not the only part of that equation, right? Your profit is your revenue minus your expenses. So, because we're paying on that, you want to make sure that you are paying attention to what your profit is. And if you have a fairly sizable profit, right, you want to make sure that you're starting to pay estimated taxes. If you don't pay estimated taxes all year long, you can do some catch up in Q4. There could be some, various different fees and things like that. The ultimate purpose, though, of paying estimated taxes is to not have interest and penalties assessed on you. So if you end up owing a whole bunch of money at the end of the year when you file your taxes by April 15th, right? If you haven't paid any estimated taxes, you could being the optimal word, you could owe some interest and penalties. Is it that much? Typically not, but I know I don't want to pay the government more than I need to. So I like to pay estimated taxes. One of the things too that I want to say, so estimated taxes for the fourth quarter are due, typically it's January 15th. I think because there's a holiday in there, it usually goes to the next business day after a holiday or after a weekend. I think January 15th falls on a Saturday. So it's a couple days after that. But I typically still like to keep that January 15th date in my mind. So I will be paying my estimated taxes by this Friday. Now, with estimated taxes, one of the things just to expand on that a little bit, because I get a lot of questions about how to pay estimated taxes. And first thing, of course, like working with your tax provider, if you have one, is going to be the most accurate, right? But in the absence of that, I'll tell you what you need to be doing when you're paying estimated taxes. You won't have any penalties as long as you pay either 100% of last year's tax liability that you have. So you'd look back at your tax return, make sure you've withheld either from paychecks that maybe a spouse has or that you have, and from your business, 100% of what your tax liability was last year, right? In that case, even if you owe a lot more this year, you won't have taxes and penalties on it, which is great, right? So I still, even if I do that, especially if I'm growing quickly, what I will do is I will pay the minimum to them all year long, right? I'll pay based on last year's tax liability to make sure I don't have to pay interest and penalties, but I will save a whole bunch of cash in my own account. I'd rather keep it myself than give it to the government, but some people are different in that. As long as it's saved, so I have some extra when and if I owe additional money when I actually file my taxes. So as long as you're paying 100% of last year, you should be good. Or if you're paying 90% of this year. That's a little bit harder because we don't always know what our tax liability is going to be this year, right? So sometimes it's easier. A lot of tax accountants just use prior year. But if you're growing a lot, right? If last year is totally different, so if you're 2020, which in a lot of cases it probably was, so this is an important note. If your 2020 was awful, right? It was awful from a profit perspective. And 2021 was a heck of a lot better, which is the story for a lot of people I've talked to, right? Even though 2021 had its own challenges, it was a heck of a lot better than 2020. You may be, and if you paid in based on your 2020 tax, right, liability, you may be in for a surprise. So I do think it's important if you can sit down, if you can get this work together, if you can get your P&L, your income and expenses together so that you can start figuring out what your actual tax liability is. It is a good time to sit down with a CPA to make sure, right, that you're covered from that standpoint. But make sure, again, we have the estimated tax deadline that is coming up. So it really depends. I mean, in theory, like so usually the first year of business, I think there's kind of a grace period, so they're not really going to assess you, right? Typically, most people by their second year of business, I would recommend it. And it's not necessarily an amount. Now, I mean, if your amount is fairly small, like if your total profit is $5,000, probably not a huge deal. If your total profit is $100,000, that's a heck of a lot of a bigger deal, right? So you want to think about, what that is and weigh it against the fact, like, are you saving for taxes? Because the great thing about estimated taxes for a lot of people is it kind of is forced savings, right? So like if we keep that money in some cases, know yourself in this instance, right? If you keep that money, even if you put it in a separate account, you might be tempted to tap into it, right? Then it can be a really good idea to make sure that you're keeping up with your estimated tax payments every single quarter, right? Regardless of interest and penalties and things like that. Know yourself, know that like, heck, I'd rather it be gone and then I'm not tempted, and know that I might get a refund, right? When I file, maybe I overpaid and I might get a refund. If that's better for you, know if you'd rather have that refund. For me, I like to pay what I need to pay, right? Like I like to pay, based on the minimum I need to pay, but I save a substantial amount and I do not touch that. Like that is a cardinal rule. I don't touch the tax fund at all. But I have it. And so it still feels like a refund sometimes at the end of the year, because what I will do, right? What I will do is I'll say, okay, I owe an extra maybe $5,000 at the end of the year, right? Maybe I didn't pay it enough. Maybe there's $5,000 that I have to pay out of pocket, which used to be like horrifying. Oh gosh, now I got to come up with $5,000 to pay these taxes. But if I've got $8,000 sitting in this separate tax account, then it still feels like a refund, because what I do is I pay the taxes with the $5,000 and then I pay myself or bring back into my business that additional amount that I had saved above and beyond it, just in case. So it really depends on your personality and how you like to handle it. But make sure that if you're not paying estimated taxes, that you are still saving for taxes. talk to a CPA, or save somewhere in the, call it 25 to 35% of profit, not revenue, profit standpoint. My mother is calling. Doesn't she know I have lives on Wednesday morning? Come on, Mom. Oftentimes you're on here. Maybe she has questions about estimated taxes. Okay, let's see. Yes, the bonus distribution. That's how I do it too. I'll bonus myself with the extra money that I saved in my tax account, and it's marvelous, right? And then you don't have to wait on that refund either from the IRS. Nope. Not going to do that. Let's see. How can you best estimate what you can put into a 401k to set aside in addition to tax payments to help offset your taxes? So it depends on the type of 401k that you have. So a regular 401k is a different story. That's usually something that you would have with an employer. If you're talking about like a solo 401k or a SEP, which is something that you would use as a self-employed person, right? It gets complicated, right? So I save money throughout the year. I kind of look at the projection, and the rules are different depending on, are you an S corp, are you a sole proprietor, as far as the percentages that you're allowed to put in. So you can talk to, the person who is probably the administrator of your plan can give you an answer as to like the percentage that you can put in, and it's usually going to be a percentage of profit. And if you so keeping up with your profit is going to be key. So you can put in amounts, but the great thing about these types of plans is while you do have to have the plan set up by the end of the year in order to contribute to it, you have until you file taxes, right? Until April 15th or when you file taxes to contribute to that amount. So if in January you're sitting down, getting your income and expenses together, your P&L, you're starting to kind of get things to your tax person, then you will be able to do that calculation yourself to figure out what the actual maximum you can put into those accounts is. So that's kind of why they give you that grace period, because obviously I did this. I over contributed in 2020, right? So I was contributing. I kind of front end load my contributions to my retirement account just to get it out of the way. And I think we didn't make quite as much as I was hoping, right? I'm the eternal optimist here. And so I ended up having to take some out, which was fine because I had until I filed taxes in 2021 to remove that. So I just had to talk to my administrator and say, hey, actually pull back this amount, right? Because that's above and beyond what I can contribute and be tax-free. And you don't want to over contribute because you can put what you want in there, but you're not getting any tax benefits from it. So you're just like hiding money from yourself with no tax benefit. So I don't recommend doing that. So that's why they give you that grace period. So you have a little bit of time to figure that out, estimate it during the year. Always using a tax person to help can be a really useful thing. I know a few of them. This seems like a good time to drop my preferred vendors list, jamietrell.com/preferred-vendors, which Danielle will drop here into the chat in a minute and I'll put up on the screen. But some of my amazing preferred vendors are on this live, like Christina, like Jackie. Jackie can help you with taxes if you need some help. I'm sure she can help you figure out what you would need to do to make sure that you're ready for this tax season and to help you actually file your taxes. Thank you, Danielle. Here is the list. Okay, so we've talked about estimated taxes. Let's talk about the other important deadline that comes in January, and that is the deadline January 31st. That's the deadline for getting out your 1099s and W-2s if you have employees on payroll. So January 31st is what you want to be looking to be able to get that 1099, get those 1099s issued to any contractors that you paid. Typically it's contractors you paid over $600 to, but I'm going to have you jump over, Danielle, to YouTube and grab the video that I released on Tuesday, because that goes into more detail about specifically 1099s and who you need to send a 1099 to. Because the great thing about 1099s, especially in today's day and age in the 21st century, right, is that we are actually sending a lot less of them than we used to have to. And that's because we use things like payment processors, right? So some of my contractors, I pay via, they send me an invoice and I pay via credit card, right? In that case, I don't need to send a 1099 to that contractor. So it really reduces, depending on how you pay them, if you're using PayPal Business, if you're using Venmo Business, right, or credit card. If you're paying via any of those situations, right, then you are not responsible as the business owner to send that 1099. It's actually the payment processor that's responsible to send that 1099. I talk a little bit more in detail about the fact that you may not always get a 1099 from the payment processor and why that's the fact. And there's kind of this gap. But just remember that there are some things to get around it. So I actually, when I set up my payments, I actually prefer to pay most of my contractors, um, via those types of methods because it reduces the reporting requirements for me. It just makes things easier. So I recommend that can be something if you're in January thinking about, well, I had to send a million 1099s. How do I get out of that? Maybe it's a matter of looking at how you're paying your contractors and no longer doing like ACH and things like that because it can actually be grateful. Yes, exactly. Yeah, I think I have one. That I have to send. Maybe two. I need to check. So this reminder is for you, but also for me because I got to sit down and do my checking on my 1099s as well. But for the most part, I don't have to send them. Also, remember for landlords, for business landlords, not like your apartment, but like if you have a business property that you are renting, right? You usually are going to be responsible for sending that 1099. Again, depending on how you're paying your landlord, but if you're paying them by check or something like that, or ACH transfer, you are supposed to 1099 your landlord. That's something that's missed by a lot of people, but that is something you're supposed to do. So make sure to check out that video. Yeah, here's the video on 1099s on YouTube. If you haven't like subscribed and liked my YouTube channel, please do that because we're really trying to grow YouTube this year. That's one of our big focus areas for 2022 is to grow our YouTube channel even more. I really want to get to like 20,000. We're at 17,000 something subscribers. I'd love to get to 20,000 here pretty soon, but we need your help. So come over there and make sure you subscribe to my channel because it means a lot. And then you won't miss any of these videos that I have that might be helpful for you. Okay. What else? So those are the two deadlines you want to make sure that you are paying attention to for January. Okay. And what that really means in both of those cases, right? It kind of requires you to really be getting your stuff together, right? Your P&L together, your income and expenses. I think and I even do this. I think that we think we have longer than we have. I think we're like, oh, taxes, April. Like we've already put the April or like maybe March hat on that. Right? We're like, we got plenty of time. I think like psychologically, I do that. But the point is with these types of deadlines and also figuring out how much you can put into your retirement account if you have one and all of this, right? It's January. You want to have a functioning P&L, know your total profit for the year, know your numbers. There may be some ancillary things you're getting together, but overall, I recommend January being the month that you're doing that. Now, depending on where you're starting from, if you're like, yeah, I have done none of that and I have 12 months worth, or maybe you like kept up with your things for maybe the first like 6 months of the year and then it just kind of fell apart a little bit, right? Depending on where you're starting, that's going to dictate how long it's going to take to get things together. But I do recommend January being the month that you spend a good amount of time on that. And the other thing that's great about that is you're then able to kind of put last year behind you, right? And start focusing and making plans for this year. So if you're still like closing out 2021 when we're 3 months into 2022, right? Then like you've missed an opportunity to really be able to fully pivot and go forward and also get all the great benefit of all the data from last year. So January is like my data month. I sit and I look through all the things. I keep up with my data all year long. But I love January because I have a full year picture and there's something like in my accountant brain that loves to have a full 12 months to look at that starts January 1st and ends December 31st. And I can see all the trends and I can run my P&L month by month, looking at or quarter by quarter and do all the analysis and really think about it and have it help inform, right? Because that's the goal. It's not just for taxes. We're talking about taxes here, but the goal is that data helps inform your plans for 2022. If it is not, if you're seeing those as two different things, I got to handle 2021 for taxes and then 2022 is a separate animal, you're missing an opportunity for richness of data, the richness of the data, this full year of data that you have to then inform your decisions for 2022 and help you make better plans for 2022. It might mean changing some of the products and services that you offer or changing the prices or looking at your costs or, like figuring out what your next investment needs to be in your business to help you grow, right? All of those things can be informed by the data. So y'all know I love me some data. That's my jam. Okay, so that's January. I want you to be focusing on all of those things in January. Then, after that fact, you can start focusing in on making sure you have good plans in place for 2022, right? This is also a good month for new processes, new systems. That's another thing about my accountant brain that I love. Like, give me something to start on January 1st, right? Like, I don't want to start anything in February 15th. Like, I want it to start January 1st. So it's great to institute new, accounting systems or payroll systems or whatever you want to do within the month of January too, to kind of start clean, right? So that we're starting the year on a cleaner basis, especially if there are things that you're like, man, this was hard last year. This caused me a lot of consternation and frustration when you're in the middle of pulling together your numbers and you're like, man, I wish I had separated out my business and personal better. Guess what month is a great month to start doing that, right? Like, don't wait until mid-year to start making the changes that you already wish you had done last year. Start now. Okay. All right. So that's most of what I want to talk about. I'm looking at my notes to make sure. I mean, there are a lot of things around your tax deductions that you want to be able to maximize as well. We're talking about making sure that you're getting the maximum mileage, right? Making sure that you're getting the maximum home office deduction. Those types of things that sometimes get lost, making sure you're writing off a portion of your cell phone bill or your internet bill and how to do that in the best way possible. So that's kind of the next focus is those are usually things that you don't pay out of your business, but are kind of added on as tax adjustments. You can work with your tax advisor on that as well. But that's kind of the next thing that once I've figured out, feel pretty good about my P&L, then it's figuring out kind of all of those split business personal expenses and things like that. That's the kind of stuff that you're going to need to give to your tax preparer. Also, a thing you should be doing in January is solidifying your tax preparer. The reason for that is because your tax preparers are going to get pretty dang busy here pretty soon. I know my friend Jackie, who's on here, can attest to that, right? If you try to call your tax preparer on April the 10th, to be filed by April the 15th, it ain't going to happen. It just isn't going to happen. You're going to get extended, which isn't a huge deal, right? Getting an extension through October, not a really big deal. But if you want to be taxed, you just feel better being done and dusted by April 15th, make sure that you have a tax preparer picked out. If you need help cleaning up your books, make sure you have a bookkeeper who can help you do that because they are also super busy this time of year. January is one of the biggest, probably the biggest, I would imagine, year for bookkeepers. Yes. Yep. You're with me. Christina knows. Like it's a lot. It's a lot for them. So make sure that you have already started to engage those people. I will go back and find my preferred vendor list in case you need it. Where was it? Here it is. Nope, that's not it. Here we go. Here's the preferred vendors list. If you need someone, if you're looking for a new person, you want to switch for this year, go check out our preferred vendors list. These are all women business owners, and they are all amazing, and I love them, and they are all friends of mine as well. We just do this to be able to recommend to you, since I don't do any services. I just provide education. We find the people who are really great at the service aspect, and we recommend them to you. Yes. Yes, precisely. Okay. So the last thing that I wanted to bring up to you guys is if you're kind of in that scramble of tax time and you're like, all of this, there's so many things. How do I keep it all straight? How do I keep all the deadlines straight? How do I make sure that I'm also maximizing my deductions? Maybe you're even in the spot where you're like, I don't know how to get a P&L. I don't have an accounting system, or my system is a mess, right? And I need to do something. I need to get a P&L. My accountant is going to ask me for my income and expenses. I don't know what they are. How do I do that quickly? We have created something for you. So I normally have my Financial Fitness Basics program. FYI, we are launching that this week. We have revamped it. We've added some new things to Financial Fitness Basics. That is kind of my fundamentals, right? The fundamentals of accounting, finance, and taxes for small business owners or solopreneurs or freelancers, right? This is helping you get your head around the entity structures, right? That are you the right entity structure? What are the differences? How do you read a P&L? What's a balance sheet, right? The basics of cash flow management. We talk about taxes and the different types of taxes that you have to pay. So it's kind of a crash course, and we give you the whole course when you buy it. It's not dripped out or anything like that. We just give you the whole course. You can binge it in a day if you want to. If you're like, nope, I'm going to get this done. Tomorrow is my day to do all the accounting and finance stuff. Financial Fitness Basics is a great bingeable course for that. We also have resources, plug and play templates, because I love my templates, guides, checklists, all the things that come with it. And if you buy during the month of January, when we are relaunching this, okay, you're also going to get it's a brand new bonus, my ultimate getting ready for taxes bundle. And what that is it has everything that you need to help you get ready for taxes fast. So if you need a P&L, we got a P&L template in there. We will teach you how to quickly put together a P&L. We also have a deduction maximizer guide where you can figure out how to maximize the deductions that you're getting so that you're not paying more to Uncle Sam than you need to, which is important, right? We also have an ultimate checklist to getting ready for taxes. So it's got all the things that you need to be doing and focusing on when you're in this time period and what you need to focus on in January, what you need to focus on in February, what you need to focus in March, right? So we kind of give you that step by step to make sure that you don't miss anything. We have all the deadlines included within there, right? So it's got everything you need plus plug and play templates that will help you maximize your deductions and get that P&L together. All of that is within this new bundle, but that new bundle is only going to be included until the end of January. So we sell that bundle on our website separately for $149, and you get it for free if you buy Financial Fitness Basics. So that's the best deal. You could just buy the bundle if that's all you want. That's fine. But the best deal is if you grab Financial Fitness Basics. This is going to go away at the end of January where you won't be able to do that anymore. So, and I think the earlier you buy it, the better, because then you have that access to that information. It never goes away. You get to keep access forever. So it's a really great deal if this is something that you've been thinking about or wanting. I want you to come and grab it. So I'm going to show you real quick. The link to grab it is jamietrell.com/basics. You can check out everything that's in Financial Fitness Basics, plus everything that's in our Ultimate Tax Bundle. Okay. You can check out all of that and snag it at that link, which I will put up in just a minute. Here, Crystal's got me, jamietrell.com/basics. That's where you want to go. This is a limited time offer. You can wait until the last day of January, but again, some of these steps are things for you to do in January. So I think the earlier you buy, the more value you're going to be able to get out of it. So go ahead and grab it today. For this special offer, you'll see here, I'm going to do a quick share screen for y'all to show you what's in this and what you will see. Let's see, share screen. 1 minute. So we're really excited because we did a whole revamp of this program, and we absolutely love it. So you're gonna jump in here. You've got my little countdown timer because you got to have that. And then we're going to talk about MIST. So you can read through that, see if this sounds like you to determine if it's right for you. And the 3 modules that are part of Financial Fitness Basics, so the core program, we're going to talk about fundamentals. So this is where we're talking about entity types. We're talking about becoming an LLC. Do you need to do that? What's an S Corp? All of those things. We have checklists and guides, right, for getting started. Great for people starting out in business or who have maybe been in business for a little while and realize this is a weak spot for them. This is a great thing to go through. Make sure that you have all the basics in order, right? Decoding financial statements, that's going to be learning about your P&L, learning about your balance sheet, learning about your cash flow statement, which you may not have or have ever looked at, but it is an important thing. And also cash flow forecasting in there as well. Also how those things fit together. So I'm going to give you some of the basics of accounting. We're not going to get crazy into like debits and credits or anything like that, but I think that this could be an aha moment for understanding how why certain things end up on your profit and loss, why certain things are on your balance sheet, like what the difference is there and how that all works together. Again, checklist guides, plug and play templates galore, including my cash flow forecasting worksheet, which is, I think, my most popular worksheet. People tend to love that one. They use it within their business to forecast out their cash flow. It's super easy to use, and it's really easy. So you can get it. We have Excel and Google Sheets versions that you can use within your business. Demystifying taxes is going into all the things about taxes, deductions, what types of taxes you pay, because it's not just income taxes, right? Like, what are you paying? Because I think sometimes that gets confusing. Talk a little bit about sales tax and use tax in here, all the things. And here are so here's our limited time bonus. This is our ultimate getting ready for taxes bonus bundle. So that's the thing you're going to get. You're only going to get this if you buy by the end of January. You can also buy it separately on our website for $149. I don't know that you want to do that. I think it's better to get it for free, right? Our All About S Corp's bonus module. So if you are an S Corp or thinking about being one, this goes into all the details. A lot. I will tell you, I see it all the time. People who are S Corps and don't really do it the right way. So this tells you how to do it the right way. We have a checklist that goes in there. There are some additional things you need to be doing if you are an S Corp, because you don't want to get in trouble, right? Like, you want to do things by the book. Most people do. So make sure if you're thinking about being an S Corp or you are one, that's a really critical bonus for you to take a look at. This one's new too. I just added this guide to avoiding IRS audit. So I sat down and wrote down all kind of the major audit triggers that are in there and how you can avoid it, right? Obviously, no guarantees. You might get audited, but this at least gives you some idea of what are those triggers and how could you potentially, be mindful of that when you are filing your taxes. And our QuickBooks Online Basics workshop. This is a replay of the workshop that Courtney Boudet, one of our QuickBooks expert, she's on our preferred vendors list as well, did for us. So you get that replay, and it goes into a lot of detail if you have QuickBooks Online. You don't need to have QuickBooks Online to get tons of value out of Financial Fitness Basics, but if you do have it, this bonus is going to be super helpful for you. And then all the worksheets and templates and all the fun things, because that's my love language is Excel spreadsheets. I love it. I know I'm strange. And you get lifetime access. It's not going to go away. So make sure, here's the price. It's $297, one-time charge, $297. This is not something that's going to re-up every single month or anything like that. It is a one-time charge. It is typically going to be a tax deduction for you, although, asterisk, talk to your tax advisor. But most of the time, this is something that would count as a tax deduction for you for your business. So if that's something important to you, then that is something to think about. So make sure to grab it. Okay, that's all I wanted to say on that. Let me know if y'all have any questions. Let me look back. Oh, thanks, Jackie. Thank you. It is our so Financial Fitness Basics, I have two programs. Basics is the starter entry level, right? That's where you want to go to make sure you can gain confidence really fast. You get all of the information immediately. I have a second program that only opens once a year, Financial Fitness Formula. That is more strategy-based, maximizing profit, those types of things. That is coming in late spring. You will see more about that, but this is a great precursor to that. So whether you're interested in that or not, this is a great refresher to make sure that you understand all the terminology. We have like a jargon decoder in there, all the things to help you feel more confident if this is an area that you feel like is a struggle for you. Let's see. Thank you. Yes, it allows you to start speaking the same lingo. So if you're kind of like in the smile and nod, you're like, you talk to your bookkeeper or your CPA and you're like, this is going to help you bridge that gap. Let's see. So true. That's why we created it, because we see this all the time. And that is something that bookkeepers see all the time. If we bought the course last year, do you have the same bundles? So if you have Financial Fitness Basics last year, we have a special offer for you if you already own it. So you should have gotten it via email, the special offer just for Financial Fitness Basics members. If you don't, email us at support@balancedcfo.com. We sent an email out earlier, I think it was Monday, about how you can grab the tax bundle if you already own Financial Fitness Basics. So make sure to check that email. Okay. It's because that's my procrastination technique, Jackie. When I'm supposed to be doing something else, I have a great idea for a spreadsheet and I sit down for 6 hours and make one. As much of an extrovert as I probably seem to you, I am what I consider an extroverted introvert. And if you sit me down with a cup of coffee or a pot of coffee and a great idea for a spreadsheet, like that is life. That is life. That is why I do what I do. And that is why I do it, so that you do not have to. Oh, man. Y'all tell me if you also email support@balancedcfo.com. If you're looking for a specific type of spreadsheet, if you're like, man, if only this thing existed, give me a week. Tell me what you want. Give me a week. I'll make it for you. Let's see. It is data and Excel. And I love that I'm not the only one. Yay. Okay, great. Awesome. I'm glad other people appreciate a spreadsheet. Okay, let's see. Yes, support@balancedcfo.com. And we will answer any questions that you have about the Financial Fitness Basics, about the bundle. If you are someone that owns it and you want to grab the bundle, email support@balancedcfo.com, especially if you can't find the email that we sent to you. Yes, coffee is spreadsheets and coffee. Although I finished my first cup. I'm trying to cut down one of my, I won't say resolutions because I don't really have any resolutions, but one of the things that I'm trying to work on for 2022, which I guess is a resolution, I don't know, is 2 cups of coffee a day. Just 2. And also trying not to add so much stuff to it. Like I'm trying, if anybody has any tips for trying to drink black coffee, please let me know. Give me all the sugar. And then, so I'll do the coffee and spreadsheets. And then if I'm still working on a spreadsheet and it's like 5 or 6 p.m., that's when you switch to wine and spreadsheets. That's also really fun. Although you have to double check your formulas the next day, typically. Okay. All right, y'all. That's true. I do have bigger coffee cups. Like this is my big coffee cup. And if for those of you who have taken my financial fitness formula course, you might recognize this, but this is kind of like a double size ceramic coffee cup. This is on the days when I need the giant one. It still counts as one, right? It still counts as one. Yay. Okay, guys, y'all are amazing. I think I'm so glad to be able to be here. I'm going to be back. Let me know what other topics you're looking for. We're also doing a lot of additional content on YouTube these days. So if you have not checked it out, okay, go over to my YouTube channel. It's just Jamie Trull. Like and subscribe. Check out the videos that are over there. We do try to share a lot of it into the group, but there's a lot of resources out there if you're looking for them. We are really focusing on that. So anyway, y'all are awesome. I will see you. I don't know if I'm back next week. I need to look at my schedule, but I will be back shortly. I think I am back next week. I think so. And I will see you soon. Bye for now.